and welcome to today's webinar, APAC Insights on World Wealth Report 2020. Thank you for taking time out and being here today. I am Vanessa Teo, Senior Director of Business Development of Capgemini, and I'm excited to be moderating the session today. So before we start the webinar, I have a few housekeeping items to cover. Firstly, today's presentation will be available after the live session and will be sent to all attendees. Secondly, we have also added marketing collaterals for your download, i.e. the Capgemini World Wealth Report 2020 and Introduction to Azqore, which are available at the Resource List tab at the bottom of the screen. And thirdly, we encourage active participation. We will be answering questions at the end of the session, so right now everyone is on mute. And during the session, if you have a question for our speaker, please send it through the Q&A tab at the bottom of the screen. Now, if we don't get to your question on time, we'll be sure to follow up afterwards. So without further ado, I'm pleased to introduce today's speakers. First, we have Shinichi Tsunomura, EVP and APAC Financial Services Business Unit Head of Capgemini. And we have Yves Saint-Girardin, CEO of Azqore Asia, who will be giving us the welcome speech and introduction. Shin, over to you.
Thank you. So good afternoon, everybody. As introduced, I'm Shin, Capgemini Financial Service APAC Head. Thank you much again for your attendance for this wealth management webinar hosted by Azqore and Capgemini. Azqore is a strategic joint venture focusing on wealth management solutions between Crédit Agricole and Capgemini. In today's webinar, Elias of Capgemini gives you good insights on wealth management, but also Sebastian and Gail from Azqore would give you Azqore execution approaches. So I really hope you're going to enjoy this webinar. Thanks again, and probably to Yves, the CEO of Azqore APAC.
Thank you very much, Shin. And welcome to all of you joining from Asia and Europe. In fact, I am very much like everyone. I'm very excited to co-host this webinar with Capgemini because it illustrates the very nature of our partnership, which is fully dedicated to serving our clients. I don't want to unveil the key findings of the report. That will be for ADS to do. So I will keep it short. But I think this COVID-19 crisis has been, or maybe in fact is, a brutal reminder that there is a constant need for the banks to review their business model, to review their client servicing operations, and to review their products. And as the following presentations will show, Azqore and Capgemini together as one is the right partner to help wealth managers find the right business model, as well as boost digitization and user experience. So I enjoyed the presentation, and Elias, over to you.
Thank you so much, Shin. Thank you so much, Yves. And hi, everybody, and thank you so much for joining us today. As mentioned earlier, I am the Global Head of the Market Intelligence at Capgemini, and I will be walking you in the next few minutes across our World Wealth Report 2020. And to start with that, what is the interesting point about it? It's really, I think, the title, and Yves, you put it very well, with current situation, with the uncertainty that we are going through, the only way to get out of it is sharp focus. And the World Wealth Report is this year our 24th edition, and next year it will be a quarter of a century. So you could imagine the number of information, the wealth that we have to share with you today. To make that happen, to make this report happen, we tap into a huge network of our clients and our customers. And we interviewed more than 70 executives around the world. To put some numbers behind what you are talking about it today, the report is based on three large sources. The first one is the market sizing. 24 years of data ended up giving us a very structured and a very thorough data source where we have country statistics as well as information gathering on our side that give us the market sizing, which will allow us to share with you where the population in the high net worth individual population and wealth is heading to by end of 2019. Second, we also survey more than 2,500 high net worth individuals across 21 countries. And we track them year after year, and we modify the panel to make sure that we have the very good representation when it comes to the high net worth individual. And finally, we survey 70 executives across the world, across 10 markets, also to get the firm's point of view. Some definitions. We define high net worth individuals as somebody that has an investable asset of $1 million or more, and that excludes primary residence, collectible, consumable, and consumer durables. His 1 million assets could be across one or multiple banks, of course. Then we have 4 categories. The wannabe high net worth individuals, we call them the mass affluent. These are the people that has between 100,000 and 1 million in investable assets. And then 3 high net worth individuals categories. The millionaire next door, band 1, from 1 to 5 million. The mid-tier millionaire, 5 to 30. And the ultra high net worth, more than 30. Keep this category in mind as we will see it as we go in the slides after. And without further ado, let's jump into it. If we were to summarize the report in only one slide, this is it. What are we observing here at the left is there is a real-time connectivity. There is a major economic ambiguity, being political, being social, being humanitarian, sanitarian, being lockdown, and so on. So there is an unusual financial trend that we are seeing, and also very interesting, we are seeing a very strong push for the sustainable investment. Second, hyper-personalization is what customers are asking for, and hyper-personalization will empower the wealth management firms to address the expectation of the high net worth individuals. And more important, to capture the key transition points that are at risk because the big tech, based on the data they are able to collect, are getting into also the wealth management business. So to make that happen, to be able to navigate with the unusual financial trends, to be able to support the hyper-personalization, what's the way forward? It's an open platform. It's an open platform for the wealth management firms to optimize the operating model and the cost structure. And to make it sure to understand all the data that we're going to look at here, we finished the study by February 2020. So this was before the impact of the COVID. But we also did a deep dive into the COVID information to help you understand where we are. So first and most important element that year after year the market expects from us is the definition of the quantification of the high net worth individual population. And by end of 2019, we identified that the entire high net worth individual population, as per our definition, has reached 19.6 million people, which means an annual growth of 8.8, faster than the last few years when the CAGR was about 7.1. If we put some colors into that, what can we see? North America has got 10.9% in terms of increase, followed by the Middle East, followed by Europe, and followed by Asia-Pac. And what are we observing here? While in 2019, the global GDP growth decelerated, the population, the high net worth individual increased and accelerated, which is a great sign. Now, if we look at the other side of the equation in terms of the wealth, what can we see here? That the total wealth also jumped from 68.1 trillion in 2018 to 74 trillion in 2019. And North America got the lion's share of this growth, 11% growth, And interesting, for the first time since 2012, Asia Pac is not leading anymore the global high net worth individuals' financial growth, taken over by North America. Why? Mainly driven by the tech economy and by the real estate. And we could see North America 11, Europe 8.8, and that's the combination of tech coming from the US and real estate coming from Europe. And both also heavily supported by the public stimulus that has been injected into the economy in 2019. So how will 2020 look like? And here, though, as I mentioned earlier, we did the study before the COVID. We did a deep dive during the COVID situation. And we looked at the 6 marketplaces in the world, the most important one, UK, Japan, China, Hong Kong, US, and France. And we compared the global stock market. And as you could see, everything was good until early Feb, and then everything went down in March because of the COVID, when the lockdown was heavy. And sooner than later, the markets recovered. And as we could see, China and NASDAQ has significantly recovered and are even better than before the COVID, while the other markets, Japan is there, Hong Kong is struggling but is improving, and the European marketplaces are yet to recover. These numbers are fluctuating as we go, and the last few weeks, with the NASDAQ fluctuating significantly, are showing a very complex situation. So if we look at it, what can we say now? We tried to estimate the impact of the COVID, and as of end of April, we estimate the decline to be around 6 to 8% of the global high net worth individuals. We engaging with several clients around the world. Most of them confirmed this 6 to 8 to 10% decline in April, but are telling us that as of now, because of the stock market doing so well, the market has recovered. Which makes it very interesting because we are struggling to evaluate how 2020 will look like, but with no doubt, we need to future-proof the business because there is major volatility coming as we speak. So if we agree that there is hyper-volatility happening, what do we need to do is hyper-personalization to safeguard the traditional and the new wealth in front of what is happening. Let's look at this volatility first. And we did a study across year after year into the asset allocation. And in growth years, as we could see in 2017, which is reflected in the Q1 2018, as well in 2018, which is reflected in, 2019, which is reflected in Q1 2020, we could see that these are growth years, 10.6 in 2017 and 8.6 in 2019. And thus, the asset allocation goes straight into the most active asset category, which are equity and alternative investment. The minute we have a deceleration in the wealth growth, as we had in 2018, look at the numbers in Q1 2019. Automatically, cash and cash equivalent takes the front seat. So looking at 2020, with 2020 being such a volatile year, what will asset allocation look like in Q1 2021? And I invite you to join us early next year to celebrate with us the 25th year of the World Wealth Report and to look at the numbers of the year 2020, which will have been very complicated. But we tried to do some projections, and we looked at the wealth tech, these companies that are into the wealth business and offering service to their clients, because they are much more reactive than the traditional players. And we took a look at how Wealthfront and Robinhood is preparing themselves. And what we could see here is wealth tech like Wealthfront and Robinhood are significantly focusing on cash, allocation of cash. So that may be the opportunity for the traditional players to also structure their offering towards more allocation of cash. Now, another point when it comes to hyper-personalization is what the customer is asking. And the main observation that we have seen is fee structure. If you look at the left side, you could see that 33% of the high net worth individuals are uncomfortable with the fee charged in 2019. 47% of them are complaining about the transparency. They do not understand what they are paying for. 41% of them are concerned by paying fees versus the performance they got. And 40% of them are unhappy with the value delivered versus the fee they have paid. And that's a very serious challenge for all of us. Why? Because when we look at the fee structure and we ask our clients, the high net worth individuals that we interviewed, about how do you today pay for fees and what would you like to pay, what can we see? That today, 26% of them are paying fees based on investment performance versus 24 are paying based on percentage of assets. When we ask them, how would you like to pay? Look at the numbers, how they really show the difference. 35% of them wants to pay on performance, while only 13 are willing to pay on assets. And that's a very interesting change for all the players. And then we went deeper and we asked the high net worth individuals about their likelihood to shift provider in the next 12 months. 22% of the 2,500 people interviewed told us that they have a likelihood to shift in the next 12 months. Why? 42% because of the fees. And then if we start deep diving into the categories, into the bands of wealth, 49% of the millionaire next door are concerned by the high fees. That's a very significant number that requires your significant attention. So the loyalty that you're expecting from your client is coming at a higher price based on performance and value delivered for the fee charged. But another angle that we ask our consumers is about their approach to sustainable investment. And very pleased to hear that 27% of all high net worth individuals are interested by investing in sustainable products. If we look into that in a different angle, what can we see? That the highest interest is coming from APAC as well as LATAM, 54% of them. Also, when we look at the wealth band, 40% of the ultra high net worth individuals are interested by that versus only 17% of the first band, which are the millionaire next door. If we continue and we look into an age perspective, 41% of the youngest high net worth individuals versus only 16% of the oldest one. And then the most interesting part for us is 1 out of 2 of the ultra high net worth individuals under 40 is very interested to invest into sustainable investment. And that's the segmentation, the hyper-personalization that you need to do. And when we ask them about the high net worth individual looking to allocate into sustainable investment, look at the numbers between 2020 and 2021. 41% of the portfolio could be allocated to sustainable investment in 2020 and 46 in 2021. Clearly, the willingness to be more connected with the sustainable investment is gaining ground. The interesting part is when we ask the wealth management firms, it seems that most of you are ready and already have an offer. 80% has an offer into sustainable investment, 12% are working on it, and 8% do not have plans. So if you are in the 80%, you will capture the opportunity. If you are in the remaining 20%, you better move up quickly and work with Azqore to have the right offering when it comes to sustainable investment, because your clients and in Asia specifically are demanding it. So when we ask them, why are you interested in invest in sustainable investment? It's very interesting to look at the numbers. 40% on the top left are saying, I believe that I will get higher return, which makes sense because now the governments are really into sustainable economy. they are less speculative, which makes sense. But I'm interested by the one on the extreme right. 26% are saying, I want to give back to society. Philanthropy is a very important item on the agenda of the high net worth individuals, and it needs to be captured on that. But then when we discussed with both parties, when we talked to the high net worth individuals as well as to the firm, we asked them, what is the main focus for you to invest into sustainable investment? And look at the numbers here. The high net worth are telling us, 55% are telling us, I want to invest in companies that have effectively managing environmental risk, as well addressing climate change and reduce carbon footprint. When we ask the firms, the wealth management firms, on what is your communication, they mentioned, we are communicating a lot on effective and ethical corporate governance and system, as well as socially conscious business policy and practice. So here there's a mismatch between what the high net worth are looking to hear and get your guidance and the way the wealth management firms are communicating today. So here it's just for me tweaking the message, adapting the message to what the customer is looking for. So, but the most important part is the demand for value-added services that the customers are telling us. And here we took the two extreme bandwidths, the millionaire next door as well as the ultra-high net worth. And then we divided them between an age group, the below 40 and the above 60. And we asked them two questions. The one in blue is the percentage of customers interested by value-added services. And what you're going to see after that in gray is the one willing to pay for it. And look at the numbers, very interesting. When it comes to the 1 to 5 million high net worth individuals, 38% of the under 40 are asking for value added, and one of two of them is willing to pay for it. When you come to the older population, same percentage of people asking for it, but they are not willing to pay for it because they assume that it's part of the service that their provider is giving them. Very much more interesting, let's look at the ultra high net worth. These are that have a wealth of above 30 million. 48% of the below 40 are asking for value-added services, and 80% are willing to pay for it. 60% of the high net worth individual of above 60, but they are not willing to pay for it. So clearly the opportunity is to focus on the ultra high net worth individual below 40 and offer them value-added services. We ask them, what kind of value-added services are you looking for? They are looking for real estate investment advice, tax planning, legal consultation, inheritance advice, and then investment of passion. Why are we saying that? This population is a very interesting one. Either they made their wealth very quickly, thanks to tech, or they inherited. So they need to understand how to handle the inheritance, how to prepare the future tax planning, how to make sure that their investment is spread and real estate investment come here, but also they want to enjoy it through the passion. So giving them these value-added services and charging them for it will make your customer much more loyal to you when it comes to the ultra-high net worth individuals below 40 years old. So what are the moments of life that are important, the key transition points that will enable you to tap on the future growth opportunities? First, the individuals entering into the high net worth segment. We have seen a lot of growth when it comes to tech investment, being in Asia, being in Europe, being in US. And also there is a major shift in populations when it comes to transfer of wealth. So what's the next for these individuals? Giving them assistance, giving them advice on the inheritance. Only 45% of the young high net worth individuals are satisfied with their firm. Only 40% are satisfied with the education they are getting. Only 40% are satisfied with the life state that they are into it. Finally, when we talk about individual planning wealth transfer, also, there is a transfer of wealth that is happening, and older high net worth individuals are looking to do that. But there is an increased life expectancy. So how do we balance passing the wealth, but keeping the right cash to be able to live? What they're asking for: retirement planning, assistance with new digital tools, and trust and estate management. And finally, the mass affluent, the one entering into the population, it's a huge category. This is a big one, and they are looking to your help. And this population is extremely digital. This population is already digital native, and you need to have the right tools to engage with this population and drive them through the high net worth individuals approach. So in conclusion, the one size, there is no surprise here, does not fit all. You need to be able to address the unique need of each one of them. The problem, how do you do that? Well, you leverage digital solutions. What do you leverage first? First, you leverage the risk profile. Today, the risk profile is focused on, or the risk analysis is focused on risk profile. Why don't we use it for behavior science and sentiment analysis to identify their profile and their willingness to invest in different assets? But also for me, the most important part is the personalization of the engagement. The personalization through the portfolio construction, the product recommendation, the advisory, and the aggregation. To make that happen, you need to do it by using data analytics, machine learning, and AI-based. And based on that, you could personalize the communication to your customers. And for me, what's very important, what you could see at the bottom left, is the portfolio aggregation. Using APIs is a must-do. If you don't have yet a platform API-driven, you are really not at par with your competitor. You are definitely not at par with the big tech. APIs allows you to connect with an ecosystem and allows you to get the best of what is outside. So moving into the third part of our study, we said it's important to be in a platform. It's important to focus on what is the most critical 20% of the value chain. What are we observing? The economy is struggling. Is a major challenge. Competition is building up. Customer expectation is high. There are several industry disruptors that are coming in front of you. First of all, the impact of natural events such as pandemic, and we are completely into it. Global economic slowdown, changing clients and expectation. But also another category is about what is happening outside. The impact of technology, the geopolitical instability between East and West, the wealth transfer, and finally, something that is a challenge for everybody today, the fee pressure due to the zero trading commission that we are observing. All that is significantly impacting your top and bottom line. And finally, a third category is the threat that is coming from big tech, which doesn't seem to be yet a very important threat for all of you. But I must here put some cautious here. The East, with Alibaba and Tencent, is becoming a bigger threat than in the West, where Amazon and others are not yet as much. But look at Tencent, look at Ant Financials, they are significantly stepping into the wealth management. So to make that happen, it's important to act. And we've always been talking about agile, adaptive, and so on. These are not buzzwords. These are a reality. So to help you into the how to act, we did an interesting job. We divided the client journey touchpoint in 11 steps. And we are going to look into it and understand which one you want to focus on. But we looked at the wealth management operating model. And we observed also, we divided into 7 pieces, being from the customer acquisition down to the value-added services, as well as the compliance. And here, what we have decided to do is to deep dive into each one of them. So let's get into the consumer value chain. we ask them 3 questions. First is, what are the touch points that you are least satisfied from your provider? And the high net worth individual told us, I am not satisfied in understanding the firm that is giving me the service, researching information about the firm. I am not satisfied when it comes to receiving personalized updates about new products and services, about receiving educational information, about interacting with specific experts in the company, and finally about value-added services. Then we ask them, if you were to look at where the big tech could give you the best service, and they told us, big tech are brilliant in giving us information about themselves. They are very good in personalizing all what they tell us. They are very good in educating us. They are very good in giving me access, very digital, very intuitive access to the information. And they are very good in the value-added services. Last question was about where could you make a big impact on my business? And they told us, we believe that the firms could make an impact when it comes to researching information and so on. So you could see that the important pieces for you is to focus on these 4 pieces: researching information about the firm, personalizing the information, educating, and giving value added. And what is very interesting is when we ask the consumers about their willingness to be open to wealth management by big tech, look at the extreme right. 74% of 74% of the overall high net worth are interested by an offer from a big tech, and 94% of the one willing to switch in the next 12 months would be interested to switch to a big tech. So there is an important moment to handle here. Finally, when we looked also at your value chain and we looked at it from a profit potential in green and increase in margin pressure in red, we can observe that on the customer acquisition, AI and analytics could help you increase the effectiveness when it comes to acquiring the right customer, while executing transactions is a major zero-fee trading impact. And finally, we looked also from a bottom line impact, and we observed that if you were to focus on the customer acquisition, on the developing and managing the portfolio, and offering the value-added services, you can automatically leverage technology to enhance profit potential while reducing the cost impact for you. So if we look at it, we have put here the few technology that could help you get into these categories. AI and analytics are the way forward, and Azqore is very well prepared to get there. Also, we asked the wealth management firms about where are you investing? And all of them told us we're investing in AI and analytics, which is great. But look at the numbers when we ask about cloud and open API. The numbers are quite low. And I know as a fact that Azqore is significantly investing into the cloud strategy as well as the open API. And such Azqore could be the perfect partner to help you in this journey. So the important part is to evolve towards an OpenX approach, where you are easily able to exchange data and resources, combine it with a fast product innovation to deliver the improved customer experience the customer is looking for. So to make that happen, it's important to work with the startup ecosystem. Within Capgemini, we have a very significant portfolio of wealth tech that we've been working with, that we know quite well, and that already embedded into the Azqore experience to help you have the right experience and make it work. So if I were to conclude, it's essential to future-proof the business to navigate in this uncertain and unusual world of hyperconnectivity, of disruption, and of economic ambiguity. It's important to address the high net worth individual expectation and to capture the future growth by knowing them very well, by offering them the right hyper-personalization they are looking for, and focusing, of course, on the sustainable investing. And finally, it's important to move into an OpenX mindset, an OpenX collaboration to reduce your cost, while maximizing the impact and the investment to safeguard the profit. So I tried to give you a very short presentation about it. As Vanessa mentioned at the beginning, the report is available for you and you can get much more detail. With that said, I'll pass the mic to Sébastien to walk us through the next part.
Thank you very much, Elias. Thank you very much. Yes, I will do the presentation of Azqore with Gaël, one of my colleagues responsible for product management APAC. And we will split between me introducing you to Azqore world and then Gaël showing you products and services that have been developed the recent year that are answering the trends that Elias you just showed. So I will start with about Azqore. Why Azqore has been created? I mean, Azqore. Sorry, just went too fast. Sorry. Okay. It again. So Azqore has been created. Azqore is a spin-off of Industrial's wealth management and has been created in 2018. And I tried not to do the same mistake. Sorry. Yeah. And what is important is not what we do, in fact, in Azqore, is why the decision has been taken to create Azqore. We truly believe that for medium wealth managers players, let's say medium managing under 100 billions of asset under management or under 5,000 employees, it's quite challenging to be profitable and to grow as fast as the biggest players on the wealth management, like UBS. So we have created Azqore in order to provide to these medium players the same chance than the big ones. We want to provide a platform, a fully digital platform, fully innovative platform with an open architecture that will provide them the same chance than the big ones. And we think even the medium players, they have higher chance to succeed in this competition than the big ones. Why? Because the medium players, they have the flexibility and agility of their size. They can take decisions much more faster. And this is an advantage for them. But it's good to take a quick decision if you have also the digital platform that is supporting you in your decision. If suddenly you want to provide a new service, a new advisory service to your clients, but you don't have the tool, then it's totally useless. So we think that we can give the possibility to these medium players to be more efficient, quicker, faster, and more successful than the big players in wealth management by giving them the possibility to access to a digital platform that we are developing. What we want to do is to give the digital experience, to provide this digital experience at the front of the bank or at their clients, and still continue to give the possibility to be efficient and compliant at the back. When I mean the back, it's either the back end of the system, the back office functionalities, or the back office services. And at the end, the goal of all of it is to share a platform amongst clients that will bring value to them, between them, to be able to be successful and profitable and to grow. And just to give you some key figures that we can see on this slide, today Azqore is providing a digital wealth management IT platform to 30 banks in 10 countries with a total of assets under management of 200 billion. So it's like if you are one of these 30 clients, you benefit from a platform of a size of a bank of 200 billion of assets under management, which is quite huge. And of course, we have created Azqore. I give you the reason why, but how we will do it there will be 4 pillars. There are 4 pillars on how we are able to provide a digital platform. And I will start with an example. You probably remember the movie of Wall Street with Michael Douglas in 1987. He was using a cell phone of the size of like 30 centimeters high. And today, the complexity for banks or for IT providers is to run an app on a cell phone like this. And this is not possible anymore. If you want to run an app, you need the most recent technology with operating systems that are open on the world of fintech. And this is the first thing you have to do. Today, the old mainframe technology that is closed is not possible anymore to run innovative fintech solution. So what we have done is we invested the last 3 years more than 50 million in a new open platform running Unix as an operating system that is able to interact with other solution, innovative solution on the market. So that was the first pillar, to change the technology on the core banking system that we were providing. The second one was to change the organization, to partner with Capgemini, the leader of innovation and transformation in the world. So to open our shares to this leading company. The third one was to change our methodology development strategy to be more agile, to work on short cycle. And finally, the fourth one of our 4 pillars that we have decided to follow is to partner also with fintech to open our ecosystem of solution to fintech to have a better time to market roadmap for our clients. So at the end, what we provide is one fully digital platform for 30 banks, open on an ecosystem of fintechs, and giving the possibility to provide hyper-personalization solution through digital to our clients, banks or clients of our clients. And just to give you why, how, and what we do, but more important, that the proof it works, we were able the last 3 years to propose 40% of savings for our clients for IT and back office services. The growth of the total asset under management on the platform of Azqore was 80% the past 4 years. We were able to support and help our clients on more than 60 transformation projects in the last 20 years. So it can be either merger or opening of a new entity in a new country, like in Singapore or Hong Kong for Swiss bank. And finally, perhaps the most important, is that in average, the growth of our clients was of 8% every year. So it means that we have helped our clients to propose new solutions for them to get new revenues, but also to help them to save costs on the back side of the platform. So back office services, back office solutions that were helping them to invest in the front office teams, to have more people going and trying to get new clients, or to invest more in front office solutions. So all of this I think, it's a proof that we answer to the trends that have been presented by Elias, and we answer to a need of our clients to invest more in the front by saving costs on the back. And now I will just introduce the product side of Gaël that will present all the digital solutions that we are developing in Azqore for our clients, developing or partnering with fintech companies. And just to come back on this major transformation of the banking platform we are providing, we were able to finalize in 3 years the transformation and the migration on an open platform that has been done through in partnership with Capgemini. So it was called Co-Revolution, but let's say the new platform now is a platform that is efficient and still efficient and compliant at the back, with standardization, automation of the processes, so it brings cost sharing for the bank, but that will allow the platform and the bank to engage their front through innovation and open banking with a marketplace where you will find an ecosystem of fintech that we will be providing and proposing to our clients. And this will bring revenues growth for the bank. So now, with more concrete examples, Gaël will present which products or solutions or services Azqore is proposing to answer to the hyper-personalization trend that Elias presented.
Yeah, thank you, Sebastian. Good afternoon, everyone. So the first point to build this open platform was to build what we call in Azqore the digital enablers. What's digital enablers is actually the build of all the APIs needed to be able to answer our clients' requests. The first step for us was to have the right governance to be able to manage all these new APIs based on our core banking system. The goal for us is to be able to build very quickly new APIs in order to interface new tools from fintechs, and to manage all these projects in an agile mode. So that was the first step for us, building the new governance and building all these APIs. And now, once this first step was finished, the second one was to start with projects we select on the market. And we have currently some projects which are almost done to interface. We will see in the next screen new tools which are in the top leader of the specific part and specific digital tools. And of course, the future is to complete this API catalog and API roadmap in order to be able to implement very quickly in an agile mode all these new projects we can find in the fintech environment. Sorry for the screen. Yeah. So how the second step after building the APIs is how to select the fintechs we would like to work them, we would like to make them as partners. So it's where we profit from Capgemini and the scale-up qualification to select in several topics the best fintechs we can, with which one we can work very easily and build the new Azqore marketplace and the new Azqore ecosystem, which will be able to answer our clients' requests. So it's where we decided to use this scale-up qualification from Capgemini to choose the different fintechs you can see in the screen and which we are working with them. We will see very soon what's the goal of this fintechs and how we can answer the hyper-personalization and the transparency for clients of our wealth management banks clients. Another part to reach our goals in order to answer our clients' requests is to make available all the data stored in our core banking system. It's really important for our clients to monitor all the activities of their clients, and it's why we create the data lake. The data lake is we would say in simple data warehouse where the client can find all the data from the core banking system in the real time. And it's really important because all this data can be used first to monitor all the activities for our clients with an ergonomic self-BI solution. And it could be used for artificial intelligence and machine learning and big data, of course. And we will see that the future is to be able to anticipate a little bit the client request on the market. And it's why it's one of the major steps we have to do is to make all the data available in a real time. So now we can see how are we going to answer to the hyper personalization that Elias mentioned. Sorry for the noise. Yeah, okay. So first step is to manage the risk profiles from the client. It's why we use a new fintech which is called NeuroProfiler, and this tools allows our clients to better understand the risk profiles of each client in order, of course, to answer correctly to the client's needs. Next step is the Edge Lab and Evoke fintech, and the goal of this tool is to sorry, I have some noise. Is to build a personalized investment proposal. I mean, now when a client is calling his bank, the goal for him is to get some proposal from advisors and from people knowing very well the market. And it's why we use this fintech, which allows our system to build some investment proposal very quickly. Next one is, of course, to propose more personalized projects. And sorry, I have lots of noise. Okay, sorry because I have so much noise in my ears. Oh, okay. So yeah, next step is to use artificial intelligence to anticipate clients' needs for our wealth management banks. And it's why we're going to work with a fintech which is called DreamQuark. And this fintech is using artificial intelligence based on all the data stored in the core banking system to make some proposal on all the services that wealth management banks can offer actually. Next step is the personalized advisory with Evoke. So build a portfolio with the client and make some investment proposal to them. Another one, as Elias mentioned in the first part, is a portfolio aggregation. And it's the next step for us is to find the right partner to build the portfolio aggregation based on the APIs we are building. We can understand it's really important because lots of clients currently are have accounts in multi-wealth management banks. And the goal for them is to have a quick overview of all wealth in one point of view. So it's why it's really important to be able to propose these services to our clients. And last part is to personalize communications to clients. And it's why the data hub can be used to quickly understand the client's activities and propose the communication, the proper communications to each client. Last part for us is to improve the platform in order to get more transparency for clients. It's why we are going to build new screens for our wealth management banks in order to be able to share the same screens with the client. And it's really important now that the relationship manager and wealth management banks being able to share the same information with the client with the same screen. And now for us in Azqore, we are going to use this approach to put the client in the center of our reflection when we are building new screens and new developments. It's why we are building UX and UI expertise currently to be able to design the perfect screen that could be shared between the relationship managers and the clients. And that will be for us a very important step to provide our wealth management banks with more transparency to their clients. So now I'm going to give the mic to Sebastian to conclude this part. Sebastian?
Yeah, thank you very much, Gael. Thank you for your part. Just to conclude before to start the Q&A. So here is some concrete examples on based on our transformation project of our core banking system and the opening of it, all the possibilities that are now available for our clients that will help them to reduce their cost, of course, but much more important, to grow and to increase their revenues through new technology and very good best time to market possible for the implementation of this new solution. So thanks to all the work that has been performed the last 3-4 years in Azqore, the platform today is open ready and ready to propose hyper personalization services and solution to the clients of our clients. So thank you, Gael, for this, and we will now start the Q&A session. I give the micro to Vanessa, probably. You will.
Thank you, Sebastian, and thank you, Gael. So everyone, now we're opening the floor for Q&A, and we have a few questions that came through. And the first question that we're going to address is, what is the digital trend or usage for ultra-high networks? So Elias, for you, please. Thank you.
Yes, of course, I can talk about it. And I appreciate the question because the ultra-high net worth is the right population to focus on. And I would even say the ultra-high net worth under 40. This is, what's the persona of these people? 2 categories. They are under 40, they're very young people. Either they built their wealth very quickly, thanks to the tech economy specifically, or real estate, but mostly tech, or they just inherited. These people are highly educated, these people are super mobile, and these people are digital native. So what is the most important thing to give them is the mobility. These people do not want to come and sit in your office for hours, as their father used to do or their grandparents used to do. They are in a plane somewhere, whenever they can travel, of course, but they are active, they are very connected, and they need a hyper-personalized approach through their mobile. They need a fully digital onboarding, they need a fully digital interaction, and they need to be able to press the button to interact with you. Their expectation of hyper-personalization is huge because these people are significantly connected to the big tech on a 24/7 base, and they're expecting from you the same kind of services they are getting on the other side. And I like the conclusion when Gael was showing the slide about all the scale-ups that Azqore has been connecting with, and then Sebastian talking about an open platform helping you to hyper-personalize. This is what you could get from a platform like Azqore, where they can bring to you each startup that could come into a specific piece of the value chain and bring what the ultra-high net worth under 40 is asking for. Back to you, Vanessa.
Thank you, Elias. And the next question that we have is, how has COVID-19 impacted your ability to support your clients? May I hand this over to Yves from Azqore Asia, please?
Yes, thank you, Vanessa. I think, in fact, the best answer I can provide is the testimony I got from a client last week who told me, so he's a Singapore-based client, and he told me that if he had not known that we had no choice but to be on work from home, he would not have noticed or he would not have seen that we were working from home. In fact, it was completely transparent for him. And I believe indeed we managed very well. Not only were we able to work on our revamping of our platform S2I, but we were also able to deliver projects to our clients and big projects, typically interfacing with the fintechs, delivering regulatory projects on the IT part, but on the ops part, even though the volumes of transactions maybe doubled, or maybe even more, we had absolutely no impact. We had no increased incidents or operational risk. And I believe that this COVID-19 crisis has in fact been a way for us to demonstrate how resilient and efficient the operating model of Azqore was. So, in fact, no impact on our ability to serve our clients. I think more a positive impact, in fact, for us in the way we had to quickly review how to organize our processes, work paperless, review the way we manage our teams. So in fact, my feedback would be this one is no impact for our clients, but impact for us in the way we operate. And in the long term, I think it's going to be a positive impact for our clients.
Thank you very much, Yves. What a great testimony. And in the essence of time, we are wrapping up the webinar. Before we close the webinar, we would like to thank everyone for taking the time out and express our appreciation for your participation. And with this, we'll close the webinar and we'll be sending the presentation and the remaining Q&A with responses to everyone who attended. Thank you very much. Thank you all.